in the 21st century. Hard-working people working hard for you and me. Moving higher, time and time again. Through the years you'll find us here. Moving higher.
Hello and welcome to Moving Iron Podcast Tax Moves with Glen Birnbaum. Glen is a CPA with Heinold Banhart in East Peoria, Illinois. And this edition of the Moving Iron Podcast is brought to you by Dawsontire and Will, your premier ag tire and wheel provider in North America, helping people grow, and TractorZoom, delivering insights. The official work boot of the Moving Iron Podcast is dry shod boots. All right, Glen, so you're getting to be quite the regular here because all the fun stuff we have coming down the pike, and this is no different. So to kind of recap what we've talked about when your taxes are due and a whole bunch of other stuff. But last week we hit up on the Small Business Administration and some special lending that they've got coming up. And on Friday of this week, they're going to open up the SBA loan application. It's supposed to come down, and there's some different tweaks and different things that have happened because of who knows what, but different than what's on the actual agenda from the Senate bill and the House bill that got passed the other day. So I guess, Glenn, fill us in on what's going to happen there, bud.
Will do, yeah. Glad to be on again. So it's about 8:15 a.m. Central Time on Wednesday, April 1st. So this is April Fool's Day.
We're not joking, folks.
Yeah.
Promise.
A lot of what we've talked about here recently is, incentives that the government is trying to implement to keep people on payroll. There's, the employee retention credit. There's, possible ways to delay payroll taxes. And there's this Paycheck Protection Program, which is really an expansion of an existing Small Business Administration Loan Program, Section 7A. So that's what we've been talking about recently. And so just yesterday afternoon, they came out with the application so that small businesses can apply for this Paycheck Protection Program, or PPP is what we're going to call it. And we weren't sure when it was going to come out, but it did come out last night. It's about 4 pages. And from what we understand, based on the guidance, there was a kind of an overview document that was released as well. And then there was a document for a borrower, and there's like a document for a lender. So in total, there's actually 4 different documents. But the document does say that Friday, April 3rd, banks will be starting to be able to accept applications.
Okay. So long term here, before we started talking, you were talking like, okay, there's a sole proprietorships and, the individuals and those kind of things are this week. And then next week is self-employed people and everything else, which I don't know the difference between the two, but I guess the government has a different. Is it a classification? Is that how you classify your business, or?
Yeah. So what it says is, Friday, April 3rd, small businesses and sole proprietors can submit an application, and then it says Friday, April 10th, self-employed individuals can submit an application. And so what you're bringing up is, what's the difference between a sole proprietor and a self-employed individual? And I really don't know. I think probably most people would say that's the same thing. So we're not sure. It does actually say self-employed individuals and independent contractors.
Okay.
For April 10th. But so who knows? Hopefully we'll get some more clarity on this. But I think most people would. A sole proprietor is somebody who, generally is going to file a Schedule C or a Schedule F, and they're going to pay, self-employment tax on all their income. So, and a self-employed individual, I would say, is a farmer, or, is somebody who, is a repair person or whatever it is. So we're not sure of the difference. I think, though, the fact that self-employed individuals, using that term, which is what the document says, being April 10th, would indicate that, and I would believe this, is there is still a fair amount of confusion on how this actually applies to self-employed individuals. It's clear, at least in my mind, that it does apply. It specifically says, hey, this does apply to self-employed people. But how it applies, what's the definition of payroll cost, is there's some confusion. So maybe they're buying some time. I'm not sure.
That's awful confusing. Like you said, it's the exact same thing. Well, in everything I've ever been taught in every business class, what you just said were the same thing. So it's one of those things I kind of shake my head at. Okay, so this is a big deal. I mean, I think this is one of those things where when we talked about it last, it was just getting through the Senate bill, and then we hadn't talked since it passed the House and got ratified and everything else. So I guess when it's going through the Senate, there was a 10-week amount of payroll that you could apply for, and if you met the needs of the terms and conditions of the loan in an 8-week period, then you were basically didn't have to pay the note back. Is that still the same? Is that still kind of the same idea?
Generally speaking, the one thing they did put in there, which again was not in the bill text or the law now that it's been signed, is they said, if you remember, you only could use your payroll costs to get the loan. So basically, 10 weeks of payroll, and then you only had 8 weeks to spend it.
Right.
And so your initial thought is, well, maybe I won't get it fully forgiven. But then they said, well, you can throw in things like rent and utilities into the mix in that 8 weeks. So, okay, now I feel a little better. Well, they put out something again on the application. It kind of says, hey, based on loan demand or subscription volume of the subscription, basically, it says that, hey, you can only use the rent and the utilities to cover 25%.
Oh, 25% of the loan?
In order for it to be forgiven totally.
Okay.
It's still an allowable use. I may not have said that quite right, but it's rent and utilities is still okay. It's not like you're illegally spending the money improperly, but you can only count 25% of the loan towards rent and utilities. So basically, they really want you to use it on payroll, right? Would
gotcha.
Would be the story there, which makes some sense. But again, it's not in the bill to say that, but it's on the application. So they kind of hedge their bet. They say, hey, we're expecting a high loan demand and things, but who knows? So the answer to your question is yes, it's kind of still there, but they put another wrinkle in.
Gotcha. So if I take $1,000 loan and I can only use $250 to cover utilities and stuff. Is that kind of interest was in there as well?
Interest. I left out interest. Yeah. Interest on your. It's maybe a little bit unclear, but we believe it's real property, mortgages, and personal property. But these are things we'd like to get some more clarity on. So.
Yep. Now this is a little bit different subject, and I don't know if you can answer it or not, but in those bills too, they were tossing around things like student loan debt and those kind of things. Mm-hmm. Is that still something that's out there? Have you seen that part in there?
I'll be honest, I have not looked at that part of the bill, Casey, so okay. I'm not sure. Yeah.
I just know that's one of those things where they've kind of been back and forth since with the Trump administration.
We did talk about, I think a couple podcasts ago, I think it was up to maybe like $5,250 that can be used.
Right. I remember we talked about that.
Stuff, right. Yeah. So I think now that's coming back to me, but don't hold me to that. But
yeah, I know they've been back and forth on that.
Yeah.
Tax.
So on the application, that's one change is this kind of, hey, don't use. You got to really use it for payroll if you want it to be forgiven,
right?
Which is obviously what most people want. They did come out with the interest rate. It is now it's going to be 0.5% annual rate, and the maximum rate was going to in the bill said 4%, so only 0.5% is the actual rate apparently. And then the loan maturity. So if you don't get it forgiven, right? How long is this? When's this loan come due? The bill said maximum of 10 years. And the actual application now says it's going to be 2 years.
Okay. So wow, they really cut that down. Okay.
So that's a pretty big cut. But I guess, again, it's for working capital. Right. Your payroll tax and stuff. So that's a change.
So the overwhelming majority of the people, though, if you're going to take, because that's what the loan's based off of, right? It's still based off of 10 weeks worth of payroll.
That's, 2.5 months.
2.5 months.
Okay. Glad you brought that up. There's, the bill said everyone, or at least about anyone I've talked to, it was like a trailing 12 months calculation, right? What's your most recent 12 months? What's your average payroll? The application, so that was the bill. The application says, hey, just look at your 2019 payroll. So, I think it means, just your calendar 2019 payroll. And maybe that's just a convenience thing, right? That you have your W-2s, your W-3s, your payroll tax returns. It's just a lot simpler.
Yeah.
But that's what it says is, hey, use a calendar year for your payroll.
Gotcha. I got you.
So again, the bill says one thing, the application says another. So
all this stuff that's happened right now, I know they've gone off. They've talked about using 2018 and 2019. They've been back and forth. If you filed your 2019 and you've already got it filed and you've got it, sent to the IRS and you're good to go,
right.
and you get that back in, February or whatever, how does that make a big difference? Or are they sticking with the 2018 taxes?
Well, yeah, I think there's a lot of, about the stimulus stuff and
right.
which year, which, we just don't have the time to talk about that. But your question is a good one, because if you haven't filed your 2019 return, which period do you use? I would believe it's still 2019, because you've done your payroll, right?
Mm-hmm.
Your payroll tax returns have been filed. So
well, that's true. Yeah.
It's a solid number in that sense.
Right.
But for a self-employed person who doesn't have payroll, it says that you can count, self-employment earnings or net income from self-employment, basically, kind of what your, in rough terms, this isn't exactly, in rough terms, what your net profit is if you got a Schedule F, limited to $100,000 annual. So you can get a loan, equal to basically 2.5 months divided by 12 of your Schedule F income. But what if you haven't filed your 2019 tax return? I'm not sure. We don't know these things, but I would lean more towards you would really use your 2019 information here. Okay, that's what it says.
So say I'm a farmer, and I file my Schedule F. In the last couple of years, just because of commodity prices the way they are and everything else we got going on, I've shown a loss in 2018 and 2019. How's that work?
We're, as of right now, this is all, you got to talk with your lender, talk with your tax advisor. But if you don't have any net earnings from self-employment, then you don't have any, payroll cost, as that's the read of the bill by the consensus of the people that I've talked to. And you might remember this, Casey, that when we talked about trading off equipment and the new rules surrounding that if you trade off a piece of equipment, now you have this big gain likely.
Right. Yep.
That doesn't go on your Schedule F. That's not subject to self-employment income, or not subject to self-employment tax. So if you have this big gain on a separate schedule, and then you take a lot of extra depreciation because you can, to get your overall income down, right, to what the level you want, you will have a loss on your Schedule F. And so if you have a loss on your Schedule F, you don't have any self-employment income. And perhaps, again, we'll see, but perhaps then, you don't have any payroll costs from which to compute your loan amount.
Well, that's a bummer. So is that something that still needs to be clarified, or is that like that's law?
I think that, with what we've seen, there's always room for clarification. But the bill says net earnings from self-employment. So
good times. All right,
could be a tough one.
So if you carried grain forward or something like that, or carried a loss back from a previous year or something like that into from 2018, 2017, you could have hurt yourself, depending on how you wanted to function on this bill.
Yeah, I mean, it's all, you certainly save self-employment tax, right? You didn't pay self-employment tax, but yeah, that's true. And again, it is capped at $100,000. So, best case, it's roughly 2.5 divided by 12 is roughly 20%. So, it'd be about a $20,000 loan,
right?
That a self-employed person could get. So,
gotcha. Okay. Well, good stuff.
So
Glen.
I think the big message is, hey, the application is out now, so you can find it online. You can start to look through it. But the lenders just saw it as well last night, so they're trying to figure it out. How's this all going to work? How are you even going to sign documents if the bank's closed? Things of this nature, if their lobby's closed and that type of thing. So there's a lot of things to work through until Friday, when apparently they're going to start receiving applications. But so we've got all day Wednesday and all day Thursday to figure this out.
Outsave, hey, look at that. Nothing but time, right? Nothing but time. Wow. Okay. All right, Glenn. Well, good stuff as usual. Anything else you want to throw out there on this that I've missed to ask since we started talking?
I don't think so. No, I think that's enough. Again, just want to make sure people know that it's out there, the application's out there, and you can contact your lender, and they're working through it as well. They may not have all the answers, but just know that things are working, and the government is trying to be the stopgap here to fund some payroll for a few weeks. So
that's all right on, man. All right, Glenn. Hey, well, good stuff as usual. If people want to reach out and talk to you about what's going on, what's the best way to do that?
Yeah, it's best to call our office here, and it'll just ring to my cell phone if you ask for me. But our number is 309-694-4251. We'll try to get back to you. We're getting a lot of interest. Or you can always look me up on Twitter at Glen Birnbaum is my handle.
Outstanding. All right, I'm Casey Seymour with Moving Iron Podcast. Make sure to check me out on Facebook, Twitter, and Instagram at Moving Iron LLC. Also check out movingironllc.com for all the latest Moving Iron Podcast information and blog posts. Also check out Global Ag Network and all the great podcasters out there, and support what they're doing. So I guess until next time, I'm Casey Seymour with Glen Birnbaum. Let's go move some iron, folks. Out.
Moving iron in the 21st century.